Developers are flooding the market with new projects, pushing unsold inventory to alarming levels. In fact, analysts warn it could hit a historic high of 23,000 units by early 2025. Can the market handle this surplus? Hi, I'm Bobo and welcome back to our weekly recap of Hong Kong real estate. Today we'll be discussing three things. First, the rise of unsold inventory with the current backlog at about 22,300 units, the second highest level in 21 years, and we'll also look at the areas with the most unsold units. Second, we'll cover New World Development's financial woes as well as the sales of its North Point project State Pavilion. Finally, we'll wrap up with noteworthy deals in the second-hand market. Following the start of the interest rate cut cycle last year, developers sped up project launches. However, many projects, even with price reductions, failed to sell out, leading to a steady buildup of unsold inventory. The unsold inventory of first-hand homes reached 22,323 units, marking a third consecutive quarterly increase and the second highest level in 21 years. Developers' sales strategies also contributed to the surplus, with some projects launching additional phases before fully selling out earlier ones. The aim is to leverage early sales in the new phase, often at discounted prices, to generate buzz and enhance the overall appeal of the development. For instance, Gold Coast Bay The Upland successfully sold out during its initial launch, but still had 240 unsold units when Phase 2 launched, offering price reductions in its early sales rounds to boost demand. The combined total of the two phases is 1,323 units, of which 653 remain unsold, nearly half of the project. This single development alone accounts for about 3% of Hong Kong's total unsold inventory. With interest rates continuing to decline and market sentiment improving, developers are expected to be even more aggressive in launching new projects. Analysts estimate that first-hand unsold inventory could exceed 23,000 units in the first quarter of 2025, setting a new historic high. Regionally, Kowloon recorded the highest unsold inventory in the fourth quarter of 2024, with 10,724 units. The increase was largely driven by underwhelming sales in Kai Tak's former runway area, where projects like Twin Victoria, the Pavilion Forest 2, and Double Coast 1 struggled to attract buyers. This led to a quarterly increase of 1,300 units, with Kowloon maintaining over 10,000 unsold units for 3 consecutive quarters. Among developers, Sun Hung Kai Properties holds the largest inventory with about 3,700 unsold units, followed by Henderson Land with 3,146 units. New World Development recorded the largest quarterly increase, adding 571 units to its backlog, bringing its total to 870 unsold properties. Next, New World Development has recently been in the spotlight due to ongoing financial struggles. Reports suggest that the developer has pledged additional properties worth billions to secure new funding, and this has placed pressure on its sales strategy, prompting the company to actively promote units in its new projects. For instance, at State Pavilion in North Point, the developer has sold 10 units through tender and plans to speed up sales after the Lunar New Year. The next batch will focus on 1 and 2 bedroom units, with the first price list expected to include no fewer than 78 units. Meanwhile, some new projects recently recorded notable transactions. At La Montagne in Wong Chuk Hang, 4 units were sold on Wednesday, including a 613 square foot apartment on the 31st floor of Block 2A, which was sold for 16.59 million Hong Kong dollars at around $27,000 per square foot. At St. Michel in Sha Tin, a 986 square foot unit on the 25th floor of King Tower 2 was sold for 18.94 million Hong Kong dollars at about 19,200 Hong Kong dollars per square foot. As developers speed up project launches after the Lunar New Year, secondary market sellers are likely to face even greater pressure. Delaying sales could lead to steeper price reductions as competition intensifies. At Harbour Glory, a 1,365 square foot apartment originally purchased in 2017 for 55.75 million Hong Kong dollars was recently sold for 47.33 million Hong Kong dollars, representing a paper loss of $8.42 million. Another unit at Hai One Grand in Sham Shui Po, purchased in 2018 for 14.28 million Hong Kong dollars, was sold for 11 million Hong Kong dollars after 6 years, resulting in a loss of 3.28 million Hong Kong dollars. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.